G'day everyone, I'm Matt Rard, CEO and co-founder of eBusiness Institute, where we teach beginners how to buy and build websites. And today I'm really excited to have a very special guest, Adrian Johnston, one of the co-founders of a company called Unibrands. Now, why today's interview is so special is because Adrian has gone out there and raised $55 million to buy e-commerce sites, websites, here in Australia and New Zealand. And so Adrian has very kindly agreed to come on to our interview series today, guys, so to inspire you, not only to inspire you, but also to share with you insights into what's it like to buy websites at that level and to raise funding to do it. So welcome, Adrian. Thanks so much for coming aboard.
Thanks for having me, Matt. Really great to be here.
Yeah, it's I'm so glad you came up to me at that event because I'd actually already heard about Unibrands and what you guys were doing. And then when you walked up to me and introduced yourself and said, "Hey, I'm one of the co-founders of Unibrands. Let's have a chat." I was like, "Oh, this is cool."
Yeah, that was a really great event. I think Flipper have done an excellent job there.
Yeah,
and really great to meet a lot of people in your community as well. It seems like a very close and tight community. So yeah, very, very impressed and very grateful to meet everyone.
Yeah, and likewise, and big thank you for coming along, like I said, because as you noticed with our community, we do, we're teaching people to buy and build websites. We're not ready, no one in our communities at this point spending 55 million on websites, but you are. And what's interesting, if you don't mind, because it sounds super impressive, and it is super impressive to raise $55 million, especially when you're such a young guy. Like, look at you, and that's what I said to you on that night. How have you done this? And so that's what I want to cover in this interview. But also, Adrian, I had a look through your LinkedIn profile and I noticed you started out as a maths teacher, and it wasn't really that long ago to now be sitting here. How the hell did that journey start?
Yeah, it's a bit of a pivot from maths teacher to. So I've actually had three careers. So you're right to say I started as a maths teacher. So in the UK, we have a program called Teach First, which is basically where after you graduate, you spend 2 years working as a full-time maths teacher in what they call a school in challenging circumstances. So I was placed in a sort of difficult school in London, lots of sort of gang violence, lots of behavior problems. It was a super fascinating experience. Very, very difficult. I learned a lot. And so after the 2 years, I actually spent a third year teaching. And in my third year, I helped set up a new school in London. And then after that, then I decided to switch careers. So I then moved into the corporate world. So my second career after that was investment banking. So I went to Goldman Sachs for 3 years.
Yep.
Then I moved into management consulting. And actually, I guess this is now my fourth career. So I left consulting to start a business.
Wow. And when you and I were talking, I think what's incredible, let's look at that final pivot into this fourth career, because you said to me, what was it you were saying to me the other day? Like just a year or two ago, you didn't really have any employees, and now you've got 60 employees around Asia. Yeah. How did you get into, and why did you decide to change so dramatically from, investment banking background into running your own business, raising funds and going out on your own and having 60 employees? What happened there? What was the thinking?
Yeah, it's a good question. So Unibrands is actually my second startup. So I've always been interested in entrepreneurship. My first startup was a dismal failure. Yeah. So my first business was an online math tutoring business. So we paired math tutors who are based in India with students who are based in the UK. And by doing that, you could reduce the cost of tuition from £40 an hour to £10 an hour. But the difficulty with that was that I was, at the same time, I was working full-time in management consulting. We raised a bit of cash. We raised about 40,000 euros to kick it off. We built a product, but then essentially just didn't have the time to put into it. But through that journey, I learned a massive amount about fundraising, about putting a business plan together, together, about building a tech product, and also just the very simple things about starting a business. I don't know if it's just me, but even the idea of kind of filling in the paperwork to start a business just felt a little bit intimidating to me. But then going through that journey, you sort of realize, this is actually very simple. you just kind of follow one step, and then you follow the next step, and then suddenly you've got a company. And awesome. So that was a really interesting learning experience. And so I really enjoyed that journey, and I was kind of looking on the periphery for what could be the next thing that I jumped into. And I noticed that I started to follow this trend in America of the e-commerce aggregators. So I don't know if you've heard of a company called Thrasio. So Thrasio launched about 2 years ago, and they were the fastest ever company to become a unicorn. So that's $1 billion company. So they did it in about 18 months. They were then copied by a company in Europe called Razor, who overtook Thrasio to become the fastest ever company to become a unicorn. And then a whole bunch of other ones popped up. But what I noticed was that nobody was doing this yet in APAC. And so I started to think, hold on, I think maybe there's an opportunity here. So I did some research. I spoke to kind of 10 people at Amazon, 20 people at eBay, a few people at Catch, just to really probe the market and see what the depth of the market is and whether there's an opportunity. And came out of that research with the realization that there's a colossal opportunity in this part of the world, and then really started from there to build out the plan.
Well done. So you saw the model that Thrasio were following, which we should mention. Thrasio buys up e-commerce sites. They're called an aggregator, and they literally have raised, how many billion is it?
About $3 billion.
$3 billion. And you just heard Adrian say they're the fastest growing company. Wow. And fastest growing unicorn, and that's through buying websites. Now, admittedly, it's e-commerce sites, which are more like not what we teach here, but it's still buying websites. And so you saw this idea, realized no one's doing it down in little old Australia and New Zealand. And you're still in London at that time?
No, so I was working for Boston Consulting Group based in Sydney.
Okay, so you were here.
Yeah. So I moved to Sydney 2 years ago in July 2020, and then after 6 months here, I then left my job and decided to. A
true entrepreneur, go dude. So you've only been doing this for 2 years, and you went out and what I take it you got some mates together and you all co-founded Una Brands. Is that correct?
That's right. Yeah. So there's 5 co-founders of Una Brands, and we kind of were put in touch with each other through various different means, but largely actually through the investors. So I started reaching out to various investors to try to get funding for this, and I came across this one group of investors who said, "Hey, Adrian, we love the idea. We think there's big potential for this in Australia, but we can't invest in you. And the reason why is because we're already speaking to Kieran, who's my co-founder, and he's based in Singapore, but we know that he wants to go to Australia. So we don't think we can invest in both of you. But hold on, hey, why don't you guys have a conversation and see where it goes? And maybe you can work together." So I had a conversation with Kieran, and we just basically decided to pair up and form a sort of pan-APAC version of this business model.
So you literally met through the fundraising process.
Exactly.
Introduced via the PE fund, the private equity funds.
Yeah, that's exactly right. Yeah.
Wow. And so you started doing this based on an idea, because here's the question for you, Adrian, and this is the bit that I want you to inspire our community with, because we teach beginners, right? How much experience did you, and no, this is public, this is going public. How much experience did you have online when you got this idea? Like running an online, I know you did your startup, but with e-commerce sites.
With e-commerce, as you say, I was very new to e-commerce. So my experience previously had been working in consulting, specifically in retail. Some of that was online. I'd never run an e-commerce business myself. The very first thing that I did when I wanted to kick this business off was like, okay, if I'm going to understand this, I need to know how to run a business. So the first thing I did was set up a very small tin pot Amazon business. I wonder if I have my products here. It's called. I did some research. It's called Claro Sports.
Yeah.
We sell pickleball paddles. So at the time, pickleball was the fastest growing sport in the world. In fact, it still is the fastest growing sport in the world. This is, by the way, totally independent of Una Brands. This was a kind of educational exercise for me to pick a product, pick a manufacturer, launch some PPC, get a bit of a community and a website going. And actually the business has taken off. So it's been a fun little side hustle, but it was really just for educational purposes.
That is brilliant. I love it. And then, so all your co-founders, when you look up Una Brands, all of them have come together because you originally had this idea and you got out there with the private equity firms and they've that's when you've all met, is it?
Yeah, so there's different stories for each of us. So we have one guy who's the CTO based in India. He had worked with Kieran, my co-founder, previously, so they knew each other. Kushal has exactly the same story as me, which is that he also had seen this business model being successful and he wanted to launch like a Singapore version, and so was looking for fundraising, and then exactly the same, was kind of put in touch with myself and Kieran through these fundraisers. And then Tobias, who's the last guy, joined us from Lazada, and he brings real deep e-commerce expertise.
He's one of the private equity firms, isn't he? Is that right?
So Tobias joined us from Lazada, which is the kind of APAC version of Amazon, essentially. So he has a real sort of operational background.
Okay, so and that's the team, and so that's only 2 years ago. Out of interest, 2 years ago, what was it like to raise that sort of money in Sydney? When you went around talking to people, say, "Hey, I've got this idea. I want to go out there and buy up a stack of websites. Can I have some money?" Is that essentially the pitch?
Yes, that's exactly the pitch. Yeah. So I would say the funding environment changes based on the kind of stability of the economy, and I would say that that was definitely a boom period for raising capital. Everything was going in positive directions, particularly for e-commerce, on the back of a kind of COVID bump, but also very low interest rates for a long period of time. Booming sort of NASDAQ and other things. So you get a lot of rejections, obviously, but at the same time that was probably a very, very good period of time to be raising capital.
And so now, you've got this 55 mil. Things have changed dramatically for you, I take it. Like we said, for a start, you've got 60 employees.
More, actually. We've got about 200 employees now.
Oh, wow. Okay. Yeah. So you've gone, for you personally, now I know you've brought on an operations person who's got deep expertise, like the equivalent of Amazon. But for you personally running this, what's that roller coaster been like over the last 2 years?
Oh, it's been a super fun journey, and as you can imagine, I didn't expect it to take off as quickly as it has. So it's been a big sort of learning curve, lots of kind of successes to celebrate, but also definitely learnings along the way. As I was saying to you, one of the things that's new for me is kind of managing a team and managing people. In my previous role, I'd managed a couple of people here and there on different projects, whatever, but I'd never put together a big team. And so now, that's been one of the things that I've really taken away from it is that experience of managing large kind of groups.
And so let's have a look at, I can only imagine that baptism of fire going, you're a young guy, not only being handed, there's a lot of responsibility with $55 million, but also having 200 people to run. So now down to the nitty gritty, the actual bit that drives your business, of course, is the buying of these websites. That's pretty key. And as you were telling me, you've got
the buying and then the growth after acquisition.
That's right. So do you want to explain, in a nutshell, your model, and then can we have a look at what your buying criteria is and what's happening there? So in a nutshell, what's your model that you do?
Yeah, sure. Yeah, so we buy businesses, small e-commerce businesses. Typically, they have revenue between about $2 million and about $20 million. And then we invest very heavily post-acquisition to grow the business and turbocharge the growth of the business. And by sort of merging these businesses together on the back end, you get a whole bunch of benefits to that. From a cost side of things, there's huge operational efficiency. For just to give you one example, we have a consolidation warehouse in Ningbo in China, which means that all of the brands together pull all of their product into this one place, and then we send it in one go, which means that we get much cheaper shipping rates than if you kind of ship as separate companies. And all across the supply chain, you get that type of kind of scale benefits. And then on the growth side of things, we're able to launch our brands into multiple markets, multiple channels, launch new products, and very, very quickly because we have the expertise. So, for example, getting it onto Walmart in America is very difficult to do, and there isn't like a phone number you can call up to like they're very kind of they're not a super seller friendly organization is our experience, but it's much easier for us, one, because if you come to Walmart at scale, they're much more likely to talk to you. But then secondly, once you've got one business in, that you can then use that as your sort of Trojan horse to then kind of put all the rest of the businesses in, and it then makes it kind of the whole process much quicker and much easier.
So in terms of, so you're building up this portfolio of websites, in terms of the buy price, the size, what did you say again? Anywhere from, what's the smallest?
Revenue typically between sort of $1 or $2 million all the way up to about $15-20 million.
So what's your typical buy price when, sorry, at the lower end of the scale and then up to the higher end?
Yeah, so we typically buy, so the way we value a business is based on the last trailing 12 months profitability. And we typically buy businesses for between about 3 to 4.5 times the trailing 12-month profitability. And the metric of profitability that we use is called the SDE, which stands for the seller's discretionary earning. And that's kind of a uniform, standardized way of looking at profit for these types of businesses.
So and what's the smallest deal you would look at?
So the smallest deal, so let's suppose the business had revenue of about $1 million. Let's suppose it had a profit or an SDE margin of 20%. That would be about 200K profit. And if we bought that business for say three times the annual profit, then that would be about 600K. We then buy the inventory on top, and the inventory in that scenario would probably be another 200K. So all in all, about 800K. We then also offer a sort of profit share mechanism and an earn out.
Yeah, that's what I was going to ask. What typically happens for the seller? So I'm just thinking, if anyone's listening to this who has a smaller, e-commerce site, because we know there is a lot of people in our community that do have that. What happens then? Do they get to join Una Brands as well, or?
Yeah, so we will typically offer an earnout which is broken into two components. One is a stability payment, which is paid at the end of the first year on condition that the business basically has remained stable. So we're not expecting major growth, but just that the business hasn't kind of fallen off a cliff or whatever. And then the second component is sort of more on the upside, which is that we will pay 50% of any increased profitability for a fixed period of time after the closing of the deal.
I like that. And do you find that's attractive to the sellers?
Yeah, very much so, because people have sort of poured their heart and soul into these businesses.
Yeah.
And they really want them to succeed, and they really believe in their businesses. And I guess one of the differentiating reasons why people will choose Una Brands over another company is because they believe in our ability to grow their brand. The upfront money is important to people, but at the same time, this is their baby. They don't want to see it just die. People say to us, wouldn't it be cool if in 2 years' time I was walking around London and I saw my product on a billboard and whatever. And there is that desire to see the brand succeed, which the kind of profit share mechanism supports.
And how are you going finding the deals here in Australia? Like, has that niche worked well? What's the opportunity here in Australia for Una Brands? Yeah,
so there's actually many more brands here than I was expecting when we initially kicked this off. Australia seems to be a sort of a hub for e-commerce businesses, and I know that you guys mainly look at content businesses, and I know that the content community here is enormous as well. But there's just so many of these independent brands, and Australia globally has a kind of reputation for natural products and sort of bohemian type products and various and sort of good design and those types of characteristics. And actually, we've found loads of really great businesses here.
Oh yeah, so it's not. So you're not finding it difficult to find deals?
No, absolutely not. Yeah,
that's awesome to hear. Okay, and so so we've talked about valuing these websites. You're buying up this portfolio of websites.
Yeah.
What sort of things? Is there any quick tips you can give that you're looking for when you're doing the website due diligence?
Well, there's a few things that make the due diligence much easier and more straightforward, which people can do to their businesses. Which is one, make sure you get all of your kind of books in order in terms of segregating your business from your personal accounts. And the number of businesses we value where we're trying to piece apart. Okay, was this expense for my personal telephone, or was it part of that paid for the business, or XYZ? It gets very painful, and it means it's more likely that the deal will trip over somewhere. Secondly, one of the questions that we ask people is how much time per week do you spend on your business? And the lower the number, the better for us, because if somebody spends 10 hours a week on their business, that's a super simple business that's going to be easy for us to take over and manage. And so one of the ways you can create a business like that is by cleverly outsourcing everything you can, and using software and technology to really streamline all of your processes. And so obviously your business needs to get to a certain scale before you can do this, but where you can outsource stuff to virtual assistants, or where you can use in our world, like Helium 10 is a really great tool, or Jungle Scout, or there's 20 different tools that you can use that really just reduce the number of hours that you have to spend on your business without costing an arm and a leg.
So one of the big things then that you really like to see in these websites is less hours, from like a semi-passive, if you will, website business.
Exactly right.
The more passive it is, the more valuable it is to you guys as buyers.
Yes, that's exactly right. And one example is if you're doing your own, this is specific to e-commerce, but if you're doing your own fulfillment from your garage downstairs, that's going to be difficult for us. Put it into a 3PL, a third-party logistics provider, quite often, like more often than not, you'll find it's cheaper than doing it yourself anyway, and you get better rates and less returns and more better customer service and more efficiency. So there's lots of things that people can do to prepare their business for sale.
Yeah, so it sounds like, guys, all of you listening, learn how to outsource, be working towards that. As your businesses grow, your online businesses grow. You just heard it off Adrian, he's got 55 mil to spend on your businesses. Get outsourcing happening in your websites. And that's, Adrian, just got me thinking about my next question that I have to ask you.
Yeah.
Where, here in Australia, where are you buying these deals? Like, do you go through all the website brokers? I'm presuming you do, but or are you doing private approaches? How are you buying these great websites?
So we do use all of the brokers, including Flipper and Empire Flippers. We met at the Flipper event last week, but we also, the majority of our deals comes from direct outbound research. So we have a tech team in India, and one of the things they do is they have kind of scraping algorithms. They scrape all of the e-commerce websites, Amazon, eBay, Catch, Kogan, Lazada, Shopee, and they provide us with kind of lists of businesses, and we then have kind of tools to filter out which ones we look attractive to us, and then we literally just email them and pick up the phone.
Yeah, email the owners, and that's how we've always done it. That's where we get our best deals too. But although admittedly these days the brokers are awesome at bringing in the really good businesses, but you've got to pay the the full price. But yeah, direct approach is very effective. And it's interesting. That's your preferred method too, is it?
Absolutely. Yeah. It's our main channel actually as well.
Okay.
Because realistically, the really good businesses, if they're really great, people often haven't thought about selling them. And so if you're the first person to have that conversation with them, then
and I guess you've got a big advantage, and maybe our listeners can do this as buyers. Think about this: is the way of structuring a deal. You come in as Una Brands, they're going to Google you. They're going to see not only do you have money behind you, but you can offer them that nice upside, that continued ownership.
Yeah, that's right.
And we actually teach that as well. Look, you can negotiate any kind of deal when you're buying a website. You don't always have to pay the full amount. You can do an earn out, or you can offer, share in they can leave 10 to 20% in, whatever. So it's good for the owners then. If they deal with you as a buyer, they get to take some cash off the table after all their years of hard work, plus they can still stay in the business and grow it. So they've got security of being part of Una Brands.
That's exactly right. Yeah, that's exactly the value proposition that we offer.
So from the buying, right? What's your plan like with exits? Because I know private equity like to see shorter term exits. Where does Una Brands go from here? You've got this portfolio of websites. Is it planned that you're going to do an IPO? You're going to list on the stock exchange, or you're going to exit at profit?
Yeah, so we're not an investment fund, so we don't buy and flip the businesses. We're more of a house of brands. So you can kind of consider us sort of like a digital version of Unilever or P&G. So for us, the kind of long-term plan is to IPO. Or there could be a potential merger or acquisition with other aggregators or other kind of strategic buyers, but that's kind of how we look at an exit.
So basically, Una Brands is a long-term buy and holder of websites.
Exactly right. Yeah.
It would literally just keep growing, owning a portfolio that's going to be your business day, and just buy and hold and then grow.
Exactly.
So over this. What's your main what's the growth, like what's the main growth strategy then? Because obviously it's the selling bit's not important for you guys. So presumably you want to grow these brands. What are some of the main key things that you do to grow these brands once you bring them on board?
Yeah, so from a kind of revenue perspective, there are typically 4 levers that we pull. The first one is sort of digital marketing optimization, which is basically we do a full brand refresh of all of the website and all of the listing in terms of SEO optimization and kind of content marketing. The second lever is international expansion. So if you're a brand that's selling only in Australia, we'll expand you into the United States, the UK, potentially Singapore, other countries in the region. The third one is channel expansion. So typically people might be selling it on their Shopify website, but they haven't really looked much into Amazon or eBay. So we'll kind of expand out the scope of the channel reach. And then the fourth one is product expansion. And we have a product development team and a kind of sourcing team based in China who are able to assist with product development.
Awesome. So it sounds like you've got a nice, very straightforward system. And it's cool because you can explain that very quickly to these owners that you're acquiring as well.
Yeah.
You can show them a really clear growth plan there, and I guess for their point of view, here's something interesting, because obviously, the majority of people listening to this do have relatively smaller websites. That can be the advantage of selling out your website to a bigger buyer, because they can't pull all those 4 levers because they don't have unlimited funds. They need the profits to live off. And, you can come in and really drive these businesses.
That's exactly right. And we really have the kind of resource and capability to drive that growth. To give you a flavor, we have a sort of 20-person digital marketing team based in India. We have a sourcing and procurement team based in China. We have a operations and logistics team in Singapore. We've got a tech team in India. And then we've got a growth team based right here in Australia, which looks at kind of international expansion, channel expansion.
So it's pretty cool. I guess it's a way of the future. This is what we actually used to do when we were selling traditional offline businesses, is sell to private equity firms like yourselves or big corporates. And you go around, you buy up small businesses, get them to a certain level as an entrepreneur, especially when you're a young entrepreneur, get it to a certain level, and then you sell it to bigger guys like yourselves. It's a pretty cool win-win model for everyone. Like our audience, want to work at home, do a side hustle type thing. They can build up a site over a couple of years. And then there's always a buyer like yourselves out there who's got unlimited funds to take it to the next level and really grow it.
Yeah, so that's right. Yeah.
It's a great ecosystem out there. That is so awesome, Adrian, and big thank you for sharing exactly what you guys do. And hopefully any of you listening just got some awesome lessons there. But bringing it back to yourself, running this and thinking of your journey, do you have any advice for beginners out there? Because, Adrian, it was only 2 years ago that you were a beginner in doing this. What sort of advice do you have for someone who's, maybe an ex-professional person wanting to quit their job or just even have a crack at this? What would you, knowing what you know now, have you got any advice for those guys?
I guess one piece of advice is to really keep your ear to the ground in terms of what's happening in other markets. Because I guess for me, the real big break was kind of spotting something that was successful and then bringing it into a different context and a different market and adding some innovation that makes it work here. But really, it was being very connected and very in touch with the developments that were happening in kind of other markets. So
awesome, and you think about it, and seriously, big congratulations. You, from doing that, from paying attention to what's happening in other markets, you got the idea, we call it you got the multi-million-dollar idea, and you've gone out and made it happen in the space of just 2 short years. That is absolutely awesome. So fantastic advice. Be looking around and keep your ear to the ground. Look out for those opportunities. And you executed. That's what is so important. We see so many people, because Liz and I, we're angel investors ourselves. And as we've seen over the years, everyone has a great idea. It's all in the execution. And I notice on your, Adrian, I did look up your valedictorian speech and you titled it, "We should all be rule breakers." Is that something that you've always had? Where did you come up with that? Like that, obviously that's helped you here, but give us some context around what you spoke about at your valedictorian.
Yeah, no. So the idea there is that people, I think, are too keen to associate what's been done previously with how things will be in the future. And actually, really, the big way that the innovation happens and that change happens is by being confident enough to break the rules of what's been done previously. And I guess the context that I was giving that speech in was with regards to climate change. Like, in order for us to kind of transition to a sustainable energy, if we're not going to be able to do it by using the rules of the past, it's going to take some pretty brave new thinking and brave new actions on that side of things. The same is exactly true in business, and so that's kind of how I think about it.
Yeah, it's absolutely fantastic, and I mean this most sincerely too. Seriously, well done. When you came up to me and introduced yourself, and I was just thinking, to know your journey within 2 years. Obviously, we coach a lot of people over the years, and I think you're the perfect example. Who's someone who's come up with an idea, you're driven, you have probably, we should all be rule breakers, and you've applied, or like you've just gone out and executed so well in an industry that really, you started out as a maths teacher and then got into, corporate, and now you're running this big organization, buying and building a portfolio of websites. I want to say big congratulations. Really well done. It's such an inspirational story.
Oh, thanks a lot. Yeah. That's very kind of you to say.
We're really appreciative of you sharing this with us. And if someone out there was listening to this and they're thinking maybe of selling their e-commerce site, what's the best way to get in touch with Earner Brands or yourself? What would you like them to do? Yeah, sure. So we're always on the lookout for great businesses to buy, so definitely get in touch. You're welcome to email me directly. My email is adrian@una-brands.com. That's spelled UNA-brands.com. Or you can go onto our website and fill out a form, or feel free to get in touch in LinkedIn. That is awesome. Thank you so much, Adrian, for today. And anyone listening, if you want to hear more inspirational stories, then make sure you click around our YouTube channel here. But also, if you're interested in, if you're just starting out and you want to learn how to buy websites, learn the skills that Adrian's got, then obviously I'm going to recommend you attend our free masterclass where we go through our strategy, very similar to what Adrian just talked about. And but we'd love to see you on the next interview. But thank you so much, Adrian, for coming along today.
Thanks for having me.